So I just want to say good afternoon, everyone, and welcome to our webinar. We're going to be talking about risk, cybersecurity insurance, multi-factor authentication, lots of good stuff. So my name is Victoria, and I'm the Director of Operations here at Cybercore. We make an MFA solution called Login TC, and I'll just be moderating this discussion today. So I have two panelists joining me, Blair from SPCS Insurance Brokers and Diego also from Cybercore. So I'll just kind of give them maybe a minute to introduce themselves. Blair, if you want to start us off.
Yeah, thanks so much. Hi, everyone. Blair Hancock with Smith, Petrie, Carr & Scott Insurance Brokers. Very happy to be joining here today and look forward to some of the discussion, and especially what Cybercore and Diego has to share. Myself, I've been in insurance for about 15 years and trying to keep it specific to cyber. I've been involved with placements from as low as $1,000 to 250 to 500,000 for just cyber alone, and even from its infancy to where we are today, and for a rather broad range of industries. So thanks very much for having me.
Yeah, thanks for being here. Diego, take it away.
Thank you, Victoria, for moderating. Thank you, Blair. Hello, everyone. Thank you for joining us. My name is Diego Matute. I'm the CEO of Cybercore. We're a cybersecurity firm, and we build seamless, user-friendly, secure, and well-supported multi-factor authentication solutions. So we've been in business for over 10 years. We have customers in 50+ countries and count several Government of Canada departments and Crown corporations as clients. So I'm really excited to talk about this new exciting topic in MFA, which does happen.
Certainly does. All right, so just to sort of go over the agenda for today. So we know that this is a really wide-ranging topic for a lot of people. So we kind of wanted to divide it into three different sections. In the first section, we'll really be exploring how the cybersecurity insurance has changed in the past few years and really what's prompting that change. Secondly, we'll get into some questions about what the current cybersecurity insurance market looks like today and really how it's impacting on like a day-to-day level, different sort of people in different industries. And then finally, we'll kind of take a look to the future, try to make some predictions about where all this is going and what we can expect, going forwards. So sort of at the end, if we have some time, I'll get to questions. So participants, if throughout the webinar, you think of something you'd like to ask somebody, please do throw it in the little Q&A section at the bottom of your screen. I'll try to sort of see those as they come through, but if I don't get to them during, I'll get to them at the end. If we don't get to them by the end, I'll make sure to get an answer for you and email that along later. Okay, so I think let's get started. So just to set the stage kind of a little bit, something that we've been talking about a lot recently is something that people are calling this kind of ransomware epidemic. The idea that, this rise in cybercrime that has been, ticking upwards for the past 10-ish years or so, really in the past maybe 2 years has started to exponentially spike. And kind of just to throw some stats out there a little bit for what we've uncovered recently, last year alone, ransomware increased about 150% in frequency and 290% in average cost and severity. And some experts are even predicting that by 2031, the cost of ransomware is going to rise to $256 billion USD annually, and that globally, there's going to be a new ransomware attack every 2 seconds. So it's not a pretty picture. And Diego, I was wondering if you could kind of start us off and just talk a little bit about what's the cause of all this? Why is this ransomware epidemic happening?
It's a great question. So a few things have happened that have created a perfect storm for ransomware. Just to add to those stats, give a bit of context. So the estimate for the global cost of ransomware in 2021 was $20 billion, which is almost double what it was in 2019 at about $11.5 billion, which is much more than what it was in 2015 at $375 million. So if you compare 2021 to 2015, you're looking at a 57% increase in 7 years. Now, the reality is in 2016, in Canada, the Public Safety Department stated in one of their annual cybersecurity reports that the government of Canada blocks on average 600 million attacks on a daily basis. So it's nothing new that attacks occur. It's very well known. What's changed is that ransomware has become much more lucrative. Cost of execution has gone down, and there are just many more businesses being targeted. So businesses around the world are very much dependent on digital assets for their own business functions. So access to those assets means that there's an ever-growing footprint of employees that are working remotely, supply chains are being interconnected, and those assets can actually be accessed from anywhere in the world. So it's a much larger attack surface. So a lot more targets for ransomware. The other problem is that it's working. So a lot of the firms are paying the ransoms, and cyber criminals realize that. So that's given rise to ransomware as a service business models, whereby developers sell or lease ransomware software to other cyber criminals. Another enabler is cryptocurrency, because it makes it difficult to track where payments go. So it makes it easier for cyber criminals to conceal their identity and activities from law enforcement. So you have all these things combined. You have a high attack surface, low cost to execute, difficult to prosecute, and it makes sense that ransomware is increasing.
Okay, yeah, that does explain things. And certainly sort of from an effect then point of view, since we talked about sort of the causes, Blair, I was wondering if you could kind of, talk to us a little bit about how cybersecurity insurers were really affected by this rapid increase in ransomware.
Yeah, absolutely. All those factors feeding in have definitely, caused some issues with insurance and a marketplace that's already having its challenges on an overall basis, where there's more money going out than there is being collected in premium, and when that happens, there's broad corrections that are being done. So when it comes to cyber insurance, all these factors are saying here, the severity, the frequency has increased. And the losses have caught up to the coverage. So, we can have a $1,000 insurance policy that can readily have an $800,000 or $1 million plus loss. There's not a lot of sustainability there. There needs to be enough premium in the pool to pay for that. But when the frequency and severity increases, we see, the insurers saying we have to exit a particular industry. We have to limit what we're doing here. And of course, premiums go up and coverage decreases. So from an effect standpoint, we've got only so many dedicated cyber insurers, and lots of cyber or non-cyber insurers who have some element of coverage somewhere, a small cyber extension, small sublimits that are clawing that back because they didn't really intend on paying quite so many losses, really, and the cost to respond to these are all increasing. And insurers are very reactive. They're looking at their past losses predominantly to project what's going forward. So when they look at that, that's where the decision making is. They're spending more on cyber losses than they're collecting on premium for it.
Okay, so thank you both kind of for setting the stage there. I think we have a little bit of an understanding now of how we're here. Proliferation of working from home, an increase in use of technology really at all, leaving all these little vulnerabilities open with remote access and stuff. And then obviously, like you said, Blair, like insurers really coming in, and while they took those early, heavy losses, now they're kind of responding. So I'd love to move on sort of to the second section. And if Blair, I'll maybe get you to chat about sort of what this hard market is looking like really for the average person. So all these changes in the industry, what are the main difficulties that people are seeing day to day with trying to really even get cybersecurity insurance at all anymore?
Yeah, absolutely. So, I mean, some of the main difficulties and challenges today, one is cost, but equally so is coverage availability. What you could get, yesterday, a year ago, 2 years ago, whether you need it or you're required to carry it, you need to maintain. And I'm largely going to be speaking to kind of enterprises up to 50 million in revenue, but this applies beyond that. This applies to all revenue bands, but there's issues at every level. But for most organizations, if they do have 10 million, or that's what they've elected to carry in liability limits, there's carriers that if they say they're not going to offer that anymore, it's very expensive to replace with the next best. If you're with an insurer today that is no longer even offering 5 million and problematic classes, and that drops it down to 2 million, your difference can easily go from paying 5,000 in premium to $20,000 to $30,000 in premium, depending on what you need. Very much so a seller's market. It's no regulation, no standard form, and they can pick and choose who they insure based on these losses. So years ago we'd be saying that those in a problematic higher exposure and risk industry such as healthcare, retail, etc., we're already seeing some of these effects, but now it really is, there's no company too small to be a target. There's no company too big. The sweet spot is in the middle. The ransomware, it has kind of, overshadowed what was previously privacy data breaches costing lots of money. Funds transfer fraud are all hitting these policies as well. That's real money. They don't have to sell a credit card information. They don't have to sell credit card information, health information. So ransomware, as Diego mentioned, is kind of the number one, and it's very accessible. It's tough to say that anyone can do it, but it's there and it's available, and you don't even have to be a target industry. So what we're seeing is lots of challenges in coverage availability and pricing, and some reactive nature of having to replace an insurer because they're changing their policies and procedures, and we have to go to the next best.
Yeah, definitely something even that we've seen, in addition to whether it's premiums rising or coverage being reduced, is, people being refused coverage outright, like just insurers saying no. And like you were talking about, that kind of seller's market, they have like an ability to do that. But I was wondering if maybe you could, reassure us a little bit and talk about what are sort of the baseline requirements that a company could have or needs to have these days in order to get insurance at all.
Yeah, absolutely, and definitely important. And just to kind of go back on where we are today, last year we were saying there's increases 100%. Now, certain industries there's increases of 140%. So today, kind of, you're asking what the kind of the basis or the prerequisites for a company are?
Yeah, kind of like the most base standard thing that you have to do these days to get coverage at all.
Absolutely. So for some industries, you can still kind of breeze through. It's still data driven depending on the class of business, where they can readily get coverage. It's still available at what's still a reasonable cost, but it's higher than what is a year ago. So there's still policies out there that still have the appropriate coverage limits, scope of coverage, all insuring agreements for, and probably more like $2,000+ whereas last year you could get those still very cheaply. If you're in a problematic industry and you're facing these questions, the prerequisites can be a lot harder to achieve. That being, there's certain expectations or scans that are done remotely from the insurers that if they catch something, it'll just be an outright decline. If you're in an industry that they're not targeting, you need to be the best in class in your business. You need to have everything, your great IT posture, some of these things which are definitely going to come up in place. And then unfortunately, if you're not a fit with some of the top markets in Canada and globally for insurance, for cyber insurance, the next best carriers have very high theoretical minimum premiums of 25,000 plus. And they have much more onerous requirements. The difference being, we can get cyber coverage with 8 inputs of data for small clients. If you have to go to these larger carriers, it can be 8 to probably 50, 60 plus pages, which is more like a cyber assessment. So it is very holistic. It is very variable, but the odds are if you're being asked some of these questions about IT controls and provisions, then they're probably going to be pretty important, and they're probably going to be pretty important that there's yes answers, that yes, we have in place, yes, we have this in place, yes, we're doing that, and it can have a significant impact on coverage availability when it's already very difficult to get to a large degree. But you're hoping for a positive kind of look and outlook. So things are settling down, but we see risk selection and underwriting being not going anywhere and being very important. So when I say underwriting, things that weren't asked in the past that are very much so being asked. They used to be a lot more data-driven underwriting. They're using their own figures and simply things like revenue and industry, and that was effectively it to come up with a rate. Now it's a lot more involved and industry focused, and it can change every day, and there's a lot of variability.
Oh, Diego, I was wondering if you could almost speak to that question a little bit as well. As a cybersecurity insurance or cybersecurity company, do you often have customers coming to you saying, trying to get insurance and I can't, and they're telling me XYZ reason, I don't understand it from a technical point of view, I don't know what to do, etc.?
Yeah, it's becoming increasingly common. So we will have customers coming to us and saying that they have some requirements for their renewals, mainly that they won't be able to get a cyber insurance renewal if they don't meet certain requirements. And for them, they're very new requirements that are kind of coming out of the blue, where they maybe only have 1 or 2 months to implement them, or if not implement them, then risk redoing their insurance with less coverage or not as broad coverage. And the interesting thing is that there's no set company size or industry where they have that new need for on renewal. It's really across the board, from SMBs to large manufacturing to even radio stations, or like just all kinds of whole host of industries. And the insurance companies are also doing quite a thorough job of assessment, where so like here's an example. So we had one client that they had a lot of manufacturing equipment, physical equipment that could be accessed through via network connections, so remotely. And they had actually not cyber insurance, but they had physical insurance on that equipment in case of fire, flooding, like the kind of standard physical insurance. And their insurance company was telling them, for renewal, you also have to add cyber security controls if you want to continue to have that physical insurance, because it's not only like a physical sort of circumstances that can cause damage to that and cause insurers to have to pay out. So it's quite broad, and I think insurance companies are sort of becoming new stewards of cyber controls and their importance for these businesses.
Maybe I'll sort of throw this question to both of you a little bit, but with all of these sort of new requirements being brought in by insurers, are they equally providing any new assistance to companies to sort of help them meet those requirements? Blair, go for it.
Sure. So are they just saying, do this and come back when you're done, or are they? Yeah. So again, there's a fair bit of variation. There are insurers that are very transparent and helping and saying the reasons why. There's other insurers that if you're not, working closely with your broker, or your broker isn't tracking down reasons, they'll just say, no, we're not providing, they're just going to decline because of the industry. They said, we're not looking at anything in this class. So there's times that does happen. There's other times where they just, it's a broad reason. It's because of industry or size. It's not something that an insurer is looking to add any more things, any more risks of certain, exposures to their books. That can even be manufacturing, it can be retail, it can be healthcare. So we see that happen. Yeah, when it comes to ultimatums, there's some that'll just say, you need to do MFA on everything. You need to have encryption and data at rest. You need to close RDP, remote desktop protocol. So there's some that'll simply say, do these things, and you can go back to the insurer and say, they've got vendors to respond to losses. So they do sometimes have some avenues to assist with these things, but it kind of requires some prompting. There's other insurers that, have active threat monitoring and have teams that will speak to insureds and their clients, the insurer's clients, the insured person, or their IT team to help them with something that they're saying needs to be done, especially for looking at new coverage, even on renewals if they have a new requirement. Some will have online resources and they call learning and risk hubs where you can access information. Some will have breach coaches that you can speak with for an hour. Others will also offer, when they're requiring these things, someone to kind of come in and decide whether or not these things are just, and it's a third-party IT consultant effectively, but the insurer in that case will rely on what the third-party IT provider says. If they say here's something that should be done, they're going to say that, well, we're going to rely on that recommendation. So again, a fair bit of variation, but it goes from everything to saying you need to do this and let us know when it's done, or here's what needs to be done, here's some people that can help. But again, shameless plug, I guess, but that's where you do need to talk with your providers, your broker, the vendors that they may have, to make sure that these things are addressed, because they can have significant impacts.
For sure, yeah. Diego, have you sort of found the same thing?
I think that requesting and enforcing these requirements is relatively new for insurance companies. It's a new space, and how to do it effectively. You're going to get a lot of variations in the early days. I think what we are seeing is that insurers recognize that in order to capitalize on cyber insurance revenue, while still making actuarial sense, helping businesses achieve the proper cybersecurity footprint is important. So, today insurers offer a lot of add-on services like monitoring, consulting, breach consulting, like coaching, like Blair mentioned. However, a lot are probably thinking of a proactive approach, which will significantly improve their position as the target business's position improves. So I think that insurance companies will likely be divided into those that will just completely get out of cyber insurance, step back for a little bit to figure out how to make it work, and others that are going to really kind of double down on it and work on how to socialize, educate, and require cybersecurity controls. And the insurance companies that figure out how to do it effectively and even help businesses achieve it have a big opportunity to take huge swaths of cyber insurance, of the cyber insurance market, because it's required. It's not going anywhere. They'll be able to do that and still maintain their actuarial responsibilities.
Yeah, absolutely. And we do have, we've got loss experience, and we get statistical reports from our insurers. We do have carriers that are reporting less frequency and less severity based on their actions already compared to the rest of the industry. So yeah, some of these things are, I think they have a shared interest in preventing the loss to begin with, and having the means and resources to respond if things, if there is a loss, if there is a breach. But yeah, they very much are looking at prevention, and I think it's still a better approach to require some of these things, such as multi-factor authentication, rather than just saying we're not going to do this class at all. Because we do see insurers, unless no one I'm going to single out, but there are insurers they don't see a way to improve in certain areas, so they'll just exit and not provide the coverage at all. So it is, it's a solution in a way. And I mean, some things have to be done to prevent runaway costs and expenses. And these stats you provided earlier, like, they're startling, but they're starting last year, and they're even more so today. And we said, COVID isn't the root cause, but it's definitely an exaggerator to accessibility.
For sure, yeah. And kind of just to sort of touch on that point you made about, preventative, proactive things that companies can do. And I think all of us here really are seeing MFA as being one of those things that insurers have started to pick up on. I was wondering maybe, both of you from each point of view could talk a little bit about maybe why you think that is and if that's going to continue. Diego, feel free to start if you want. Why do you think insurers have picked up on MFA as a top thing for prevention?
Yeah, I mean, well, let's just look at some numbers. So Verizon data breach report, they have an annual report. And for the last few years, it's always been the same stats. But so last year, 61% of breaches involved credential data, like weak or stolen passwords. So the biggest threat organizations were facing was account takeover. So that's when someone is able to just take over your account and then they can act as you in that organization. So an online internet user has on average 3 dozen online accounts, but only uses 3 to 5 unique passwords. So a password breach in one place means that it's a breach for everyone. So as soon as your password leaks, it can be tried on all the other places that you have an account. So by solely relying on passwords, you're effectively, as an organization, you're effectively outsourcing your security to every other place that accepts passwords. MFA adds an additional layer of security to include, a physical factor as part of that identity validation process. And so that significantly increases the complexity of doing an account takeover. So it does that because it adds an additional identity factor. So I like to call it an identity dimension. And so we know of 3 identity dimensions. So there's the dimensions of things you know. So your mother's maiden name, your password, the city you're born in. Then there are things that you have. So these are physical items in your possession. So like single purpose hardware tokens or, a smartphone, a laptop. And then there are things that you are. So there's like biological factors, partly behavioral and some that are sort of unique to you, like an iris scan. So when you add a second dimension, what you're doing is you're adding an orthogonally distinct problem for an attacker to overcome. So just because you can steal 1 million passwords, it doesn't mean you can steal 1 million smartphones. They're just completely different problems. So MFA has become a strong tool to limit account takeover. In the past, things like ransomware were a nuisance, but now we're seeing an increase in occurrence, very high profile, and large sums of money being demanded. And actually these ransomwares can have like impacts on countries. So for example, last year in May, you had the Colonial Pipeline, which is one of the largest pipelines in the United States, had to halt their operations as a result of an attack. They did it out of an abundance of safety, but they had to halt their operations. And they ended up paying a ransomware of more than $4 million. A month later, in June of 2021, the Biden administration actually sent a memo to corporate executives and business leaders. And the title of the memo was, "What we urge you to do to protect against the threat of ransomware."
Wow.
So in there, they outline top cybersecurity practices for businesses to implement and limit exposure. And those practices are well known, like security teams will know those practices. And I'm sure they were happy to see a memo and finally get attention and perhaps the prioritization and resources to execute it. But one of the first things mentioned was 5 best practices from an executive order that the president did just a few months before, called improving the nation's cybersecurity. And part of that, establishing multi-factor authentication, was a key part of that executive order, among other things. But it was just mentioned very early on in the Biden administration. So the goal, of course, is if you protect employees' accounts and high privilege accounts with things like multi-factor, it makes it harder for ransomware to cripple a company's infrastructure and impact society in some cases. Just another stat, in February of 2020, there at the RSA Security Conference, Microsoft, which has obviously its Azure services, they do tracking over 30 billion login events on a monthly basis. So like 1 billion events a day. And their engineers say that 99.9% of compromised accounts that they tracked every month didn't use multi-factor.
Wow.
And that the main source of compromise was, again, using well-known passwords. So these are passwords that everyone would use, password 123 or password 1234, or using the same user's passwords from other sites and just replaying them. So just some examples of how it's not the only thing that can be done, but it does sort of elevate your cybersecurity position.
Yeah. So Blair, Microsoft and the President of the United States, all talking about MFA, the kind of insurers that you work with, are they doing the same?
Yeah, if you were to look at pretty much any article or bulletin from an insurer, if I were to pull 5 to 10 of them now, a lot of the direct quotes from there would say that, MFA is the single most effective method to preventing a lot of these attacks. And there's others we could throw in there as well, and other things, mitigating factors and training and awareness, but they say MFA is most effective. I like to make bad comparisons, but you take a car and the club. So you've got a car, anyone can break into a car, and we see a lot of them being stolen. I mean, I look at it as putting the club on your car, especially here in Ottawa. You hear of all these thefts of Forerunners, Highlanders, some of those Lexus and Toyota SUVs, and sorry to anyone who drives those, but the police recommendations on some of those was to park a more inexpensive car behind, or to put that car in the garage. You can put a club in it as well, and you can have hidden cutoff switches. So I think that's just a secondary layer that insurers have picked up on. If that was in place, it would have prevented a lot of these losses that have happened. So that's where we see them implementing it. And again, not my place to say, but they consider it to be very easy to implement. I know there's work involved, but they think it's a very cost effective, and the ease of implementing it is fairly low. So that's the number one on a lot of lists we see. There's other kind of factors that play into it as well, saying that they're going to cut your deductible retention in half if you have MFA enabled. But yeah, that's definitely, I'd say of 3, it's the top one item that they're saying that you need to have this in place. And before, it might have been selective as to which industries they went after for that. Now we're seeing it everywhere, and yeah, our clients, and as you've experienced as well, it's already been a discussion, but it's more so ones that might not have internal IT, might have not really had much of a remote presence previously, and now it's coming up now that they have to have that in place. And I think we kind of briefly mentioned that we have some insurers who are asking 8 questions on multi-factor authentication. So it's not as simple as a yes, no, we have it. It's yes, okay, well, let's go on and explain what that applies to and where it is. And some of those questions, within an intervention, are very difficult to answer yes, where some things don't apply. It's when we're talking about mandates and ultimatums, some of the insurers say, we don't care as long as it's a yes here, and there's no exception. So some of it takes a little bit of a little stick handling, but I think it all comes back to them saying that, we're looking at these losses and loss of passwords and other data and the ease of getting in without that. They're looking and saying that had this been in place, there's a very high likelihood that this would have been preventable.
That is interesting. I am cognizant of time, so I think I'll go to our sort of third topic of this afternoon, which is just sort of looking forwards and thinking about kind of where do we go from here. I know I painted a dark scenario right at the beginning there of, 10 years, we're going to be attacked by ransomware every 2 seconds. Diego, I'm wondering do you think that's inevitable? Is that undoubtedly where we're heading? Is there something have we reached the point of no return, or, can we kind of pull this train off the tracks a little bit?
Well, ransomware is not going anywhere. I mean, in many cases, it's going to become increasingly cheap to deploy and exploit. So, so are solutions, though. So, to protect oneself, they're becoming more readily available and more accessible. So, just like many homes are being protected with an alarm system, or cars have built-in features now. So, I also think that cybersecurity practices for businesses will become increasingly standard, accessible, and streamlined. So that'll continue to make it expensive for cyber criminals to target and reduce the financial interest in order to execute those attacks. I mean, if you look at the history of say multi-factor authentication, originally the industries that would do that were really just critical infrastructure. So like energy sectors, financial services, defense manufacturing, water systems, transportation, an obvious need for multi-factor for those sectors. And then you had regulatory compliance come in. So in the United States, it's the Health Insurance Portability and Accountability Act, HIPAA for patient records. In Canada, you had the Personal Health Information Protection Act. So again, you had laws that were outlining how to protect this data. MFA was a part of that. That impacts more organizations. Then you had industry self-regulation. So the big one was the payment card industry with PCI compliance. So any organization that was touching credit card information now had to have increased cyber security controls. So again, more proliferation of cybersecurity. Now, what's very interesting is because it's becoming more popular, it's more spoken about, there's a lot more at stake, a lot of industries are kind of jumping on board, and you have more enforcement happening from within. So if you're a vendor now, say you want to sell to Walmart or to Amazon, you are going to have to comply with very strict cybersecurity controls. And so again, more proliferation. And now with the actuarial reality becoming even greater, insurance companies are now going to kind of be the shepherds of better practices and cybersecurity practices for a lot of businesses. So, I mean, although ransomware is not going anywhere, the momentum of having cybersecurity controls and solutions that will allow businesses to implement them is just getting more streamlined and accessible. So.
Okay, Blair, what about you? Ransomware isn't going anywhere. What about this hard market?
There's some signs of improvement, as I said earlier. Last year, and we've experienced this too, where increases in premiums can exceed 100%. The outlook is still very high for that, and it's industry specific. We can see 100, 140%, whereas other lines of business can be 0 to 20%. And we can group IT professionals in that group. So not just cybersecurity, but technology errors and emissions still seeing their challenges. So again, insurers are reactive. They go on the results. They've had some favorable results overall. So the outlook is positive. I mean, I just said there's 140% premium increases expected in some areas. But the outlook is still that, with some of these measures being put in place, with the results improving, that, the premiums will follow, competition will increase again, coverage will increase again. But, right now we're in a shrinking capacity market for cyber insurance. A lot of them are really taking these broad approaches to look back on, what they can do to remain in an industry and have sustainable losses going forward. But yeah, we see information underwriting is certainly not going anywhere. Risk selection isn't going anywhere. So we're talking about prevention a lot, but preparedness is very important as well. And our insurers are going to want to see that, and been asking for that in many instances. So being prepared, having a incident response plan, having a breach response plan, having a business continuity plan, having backups. There's other things that can be done, to help, recapture your data. And we do have clients that were able to just snuff off ransomware because they were able to get their data back. They were able to segregate and stop things quickly and mitigate the damages. So there are some success stories as well. But yeah, there's plenty of cyber claims that I've seen and been through, and a high multitude of different amounts. So that can be, if you see something in the media that's says it's a $20,000 ransom, you know, you might perceive that, well, I mean, at least I can pay the 20,000 and move on. Oftentimes that costs the cyber insurer 10 times that in the background. And we've seen losses with a $20,000 demand that have cost $400,000 to $800,000 and more. So it's important to, you know what data you have, what protections are in place, and what you have to respond to an incident if needed, when everything you've been doing everything right, and there's still sophisticated ransomware attack that gets in.
On your kind of point about preparedness, I thought maybe just pose one last question to each of you. If you could kind of give one main takeaway, one main big, recommendation for our participants here about something they could do to prepare for this future that we're kind of walking into, what would it be?
Well, I'd say it's, making sure that you are best positioned. I mean, a lot of times there's a lot of interest on what's being done from IT. There's, Diego, Victoria, you've been talking about MFA for quite some time. So there's a lot of our people in IT and our clients with IT that have been saying, we've been honest looking at it for some time. There's budgetary constraints. We definitely appreciate that. When we're having a lot of review meetings with our clients, and especially in, well, I'm not going to pinpoint industry, but across the board, senior management, executives, board, they all want to know what their IT protections are. They all want to know what their cyber insurance is. So I think attention is definitely due there, and lots of attention, making sure that everything is appropriate, and reviewing it and testing it, and actually looking what's in place and what to do in the event of a loss. So I think it's, upping your security, upping your IT posture, and reviewing it.
Okay, Diego, what would you say?
Well, come talk to us if you have cybersecurity requirements and they include MFA. We can certainly help with that. Overall, I would say that you need to stay informed. There's a lot of great tools that businesses can use that are comprehensive and streamlined. So, for example, in Canada, the Innovative Science and Economic Development of Canada, ISED department, they have a cyber secure certification process, and it's very accessible. I'd encourage all small and medium businesses to at least do a review and give themselves a goal to go through it and help them set themselves up for success. It's a good framework that will challenge businesses' IT decisions, their priorities, and current practices with a cyber lens. And even if it may seem like it's a lot of work to sort of get through it all, you'd be surprised how straightforward a lot of the controls are actually to implement are. And a lot of it really boils down to common sense and best practices.
Okay, well, thank you both so much. I am cognizant of time, so I don't think we have any time to get to the questions now, but we're definitely going to send out a recap of this webinar, including a link to the video. And if you do have any questions additionally that come up, you can always reach out to us either at Cyber4 or Blair. I can send out your contact information as well, perhaps. And if you have any questions, these two guys would be more than happy to help out. And Diego and Blair, thank you both as well so much for coming on this panel. And everybody have a great afternoon.
Thank you very much.
Thank you.
Thanks, guys. Bye for now.